Good morning, everybody, and welcome to our morning volatility report. As I am Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to our morning vol report. Our big event is our vol course, which will be a 2-week course. It'll be an hour a week, all recorded. Around how to trade volatility. And really, we're going to be focusing on the volatility products. Mark and I are thinking of one for just more vol-based trading now. We have that for our gold and platinum classes already, but we thought about jingling around a little bit for Option Pit members, and for that the rest of the year. That's kind of what we're working on right now. But for now, it's a complete course, so you can walk away and you can actually understand how to trade the vol products. That's the goal of the course. So the goal is every day there will be a trade concept based around volatility that you can go out and use and analyze what's happening. Okay, and then based on that, you can create option trades. So again, if you're interested in taking the class, you can get Option Pit Live for free if you send me a note at andrew@optionpit.com if you sign up for our vol class if you're new to Option Pit. All right. Well, free for while you're taking the volatility class for the 10-week period. All right, and with that, let's move on to what's happening in the world. So here I'm just about to get a settlement for VIX. I haven't looked yet, but it looks like Wednesday morning we are getting one of the lower settlements we've had. I think the last cycle, we have like an 11 settle. We were touching down here again. We had this little run up, which is probably a little bit of an opportunity to reload. And now we're heading back the other way. So again, this is the type of market action that volatility does not like if you're long vol holders, where it's very difficult for vol to catch a bid and keep a bid when the S&P 500 is basically moving at a third or a quarter of a percentage point a day. It's kind of the vol killer. So when we looked at some vol trades, what this does is it makes it's making our standard futures, all this stuff is just starting to melt into the lower VIX number. A 12 VIX number, again, puts our January cycle $1.50 above. We could see a 12 VIX by the end of today if this keeps up. So there's a lot of pressure on these vol futures if something does not happen, right? And what's really is we had what I would say kind of calm, sort of flat movement. Then it was a little bit for vol. I think it was the Russians, or who knows. It sounds like a lot of the prevailing sounds that are coming out are kind of the less volatile type noise, which is keeping a pressure on VIX. So you've got a ways for things to go. We have 2 weeks to go to expiration. I think right now February is probably about fairly valued relative, but it's fairly valued, but fairly valued with normal premium, which is pretty heavy. Anytime you see that, again, we'll talk about that in our vol course, is that's difficult for the vol products. So again, I expect that stuff. And today in our morning, we'll talk a little bit about volatility this morning, what is going on, and what is the potential here. Again, things are pricing in an interesting way for us for some of the downside here. I also want to look at Feb and March volatility, because when you're now into the 70s, the back month vol always trades cheaper in VIX for a variety of reasons, which we'll cover in our class. But for right now, you've got very, very low VVIX. You got 83% Jan. It's almost it's hard for it to get much cheaper than this, right? You could buy the 14. Think about it this way: you can buy the 14 and a half strangle for $1.60, right? Just look at it like this. Okay. Even if you bought it 10 times, you're going to pay $1.80 for something that is almost parity already. You don't even have to buy as many calls. You can change that around. Again, little techniques like that, which we'll be looking at in our vol masterclass. Just seeing where vol is, understanding what the normal pattern is, and then trading it. For now, today, it seems like until we have more news, we're really not going to get that 20,000 on the Dow that I thought we'd get by the end of the last year or end of 2016. It looks like we're moving more on to that for this year. So we'll have to wait. We'll need some good earnings to propel things higher. But again, I think the trade now really is VIX. Take the low volatility and ride the contango into the ground. That's at least what the market's giving us. The second trade, I think, is, and we're going to discuss that today in our chat room. But gold and hedges around gold and hedge sort of long trades. If we get a little pop, it seems that it's still moving around, and there's some opportunity here, especially with where the volatility is. So we'll take a look at that in our chat room today. And with that, it looks like a quiet week with the FOMC today. That's really the only monkey wrench. So again, buying the strangles or buying some calls on a ratio, I think, would make an interesting trade. So we'll price that today. And with that, everybody, you guys have a good day.